Hey everybody, Steve here, just checking in from Nashville, sitting in Holiday Inn. You can see it in the background here. We're in town to do some college work for Alexa, but have been offline for pretty much the whole week because it's been a straight up market. Nasdaq's been screaming higher. The Dow Jones has been screaming higher. Things changed a little bit today, so I want to talk a little bit about that. But standard disclaimer applies. This is not a personal financial presentation, so you have to do your own due diligence or act on anything you hear in this presentation. Full information is available at ankerstarwealth.com. We're going to talk about three things today. We're talking about the market. We're going to talk about this new software we have, which we're, maybe rolling out as early as Monday to put everything in your hands. Super excited about it. We're looking for beta testers. Reach out to a few people today. If anybody wants it, please reach out to the VIP services email and let me know. We'll bring you on board early. You can help us troubleshoot everything. The only thing we know for sure, it's not going to be perfect, right? Despite our best efforts, special shout out to Nico and Jaden who've done the preponderance of the work. Candace and Allie have been involved to a certain extent to get things right. But we're really super excited for it. And then the last thing we're going to talk about is Schwab and why is Charles Schwab's stock screaming higher. So with that, let's go ahead and get started. I'm going to share my screen out to you and look at the CNBC from today. You can see that the Dow is up. The 52-week high. There's headlines are in there somewhere. 9 days in a row. If you flash back to the investment advisory board of early July, earlier this month, I talked specifically about how the NASDAQ had run up and probably wasn't as good as everybody thought. And the Dow had been left behind. And even within the NASDAQ, it was only a handful of names that were really carrying everything higher there. So it was kind of a position. How do we capitalize into the fact that the Dow has been left out, and that's the DOGG holding that's in many of the moderately adjusted above portfolios, and the KRE and the Schwab and some of the other non-tech type investments that we have. So pivoting towards that to take advantage of the move higher, we were successfully able to do that again. We made the call, and then we're validating for the past basically 2 weeks with the Dow moving higher. You can see today's results today. What did change today is tech finally took a breather. We knew this was coming. It's not a sell your tech and move on kind of moment. It's just simply the fact that it has gone up so far so fast, excuse me, that it needs to take a break, right? So it's going to come in today, it may come in tomorrow. I'm not worried about it at all. It's still, the game-changing investment landscape and theme that we want to be invested in long term, that it's got to take a break. Even Apple that released some AI thing, Amazon released pay with the palm of your hand at some of their cashless peopleless stores that they have. Amazing stuff. Normally the stock would shoot higher on news like that. It's got to take a break, and it's taking a break right now. So anyhow, that's what's going on with the overall markets. What I will say is the narrative is changing without any of the data changing, right? So we ended the rate hikes in Q2. There was a tough talk out of Powell and the Fed about maybe one or two more. Everybody freaked out and said, we're going to have this huge recession. Well, so far, and I've always been in the no recession camp, I think the labor market's going to win out. But we're not really seeing any indication of a recession anytime soon. The market's starting to celebrate that. Now markets can get ahead of themselves too. But I'm not saying this is, we're in the clear by any means. But certainly, I still think everything points to this will be the soft landing. That's almost a miracle to engineer from the Fed's part to be able to raise rates for 10 straight times and then end up without a recession. I think they're doing it, but we'll have to wait and see. So really, wait and see mode. We've got a nice game this year. Yep, I'm sure some portfolios screamed higher if they had 2 or 3 stocks in them, but for a professionally balanced portfolio, risk managed, you've seen nice gains this year. So you should be happy with that. And then we'll see. If there's a recession, we have to go back into defensive mode, right? If there's not a recession, we want to keep just enough momentum to keep on going forward. So that's what we're doing. So that's topic number 1. Topic 2 for today is we're bringing to you Black Diamond. Whether if you opt in early, again, just tell us. We'll get you all set up with the welcome email. If you want to wait until Monday for the mass rollout, that means, nothing will ever be bug free, right? There's always going to be a few things. But this is the landing page that you're going to see. And again, that's my username. You'll be given a username and then the intro thing that the team has worked out for you to set up a password, standard sort of stuff. But once you log into Black Diamond, that's everything. That's the advantage of this. It's single sign-on, and it's everything that we work on for you put into your hands. And it's not just if you're sitting in front of a laptop. Check this out. I mean, literally check this out. Boom, Black Diamond right here on the phone. So if you want to see your financial plan, pull it up on your phone. Literally, it takes about 8 seconds to get through the login and for it to spin up. And, about 8 seconds, you can have your financial plan in your hand, whether you're 3 in the morning because you're laying awake worrying about something, or you just can't sleep and you're bored and want to look at your money. Hey, I get that. It's however you want to do it. I mean, right? Or if you want to check it 100 times a day, you can check it here just like you do your account. You don't have to log into Schwab anymore. You don't have to log into Risk. You don't really log into Risk. Money Guide Pro. Some of you have your own logins. You can import stuff in here just like mint.com and all those other financial things that are out there, but then they crush you with ads because you're not paying for it, right? It all comes to you with part of your Ankerstar Wealth service. It's all set up in here. I'm telling you, it's everything I have available to me when you call and ask me a question and I log into something to find the answer or the projection or the forecast or to produce a chart for you. It's right here and it's in your hand. And that's part of our service to bring that as far forward as we can to you. Because what does that really allow? It allows the information to be there for you. So when you go to ask the question, it's not the how are my accounts doing? It's a why is my account not doing as well at this or that, or how should I position it going forward? It allows the conversation level to go to a lot higher level. So we're super excited about it. Again, don't expect perfection, but the team is on it, is all I can say. Got the smartest people I know working it, and that's all you can ask out of anything, right? So once you land, whether you're on the, if you're on the app, obviously it'll look like an app sort of thing. But if you're on the website, here's what your page will look like. This is the public-facing Black Diamond page. These are not real clients, real information. They're doing pretty good though. They got 13 mil, doing all right. Nice picture of some family. I don't know. You can put your picture in there if you want. But you're going to have your overall performance. You're going to have your allocation right there. You're going to have your activity summary. Personal and projected income for those that are living off income, or if you want to see just how much cash is your portfolio kicking off, there's, the net worth piece, and then there's growing. There's also how much cash is this thing kicking off. That's that passive income piece we generally don't talk about until we get towards retirement. Then you have your risk slides right here and another pane. You can see there's 5 pages and stuff there. I'm only showing this. You can keep going. You get into your Money Guide Pro plan, which is your financial plan. It'll tell you, how you're doing. It'll give you that percentage. Are you in the green, right? That's what I think is like 80 to 90%, chance of success, that sort of thing. So you can literally go to town on this. Like if you, it's kind of as much as you want. I'm giving you everything I got, right? Everything we got, we're putting it right there for you. So we're super excited about it. So I like mine. I end up checking them. It's like a new toy for me, so I'm probably over checking it right now. And I expect that through. But once you settle in, though, you'll understand that anytime you have a question, you shop there, not shop, but you go there first. And this is 1.0. 2.0 is going to allow a chat function right from your phone to ask a question, and it's going to come into all of us, if you will. It comes into the system, and then your assigned advisor will get to it, on normal time frame. But next year there's a building coming, there's a 24-hour operation coming. So basically, if you ask a question at 3 in the morning, you get an answer at 3 in the morning. And that answer may be, it'll be a junior advisor, maybe not be able to handle the most, won't know your situation sort of thing. But a person will be able to take that message and message you back and say, here, I can talk you through the basics, but your assigned advisor will be able to get back to you by 9 a.m. tomorrow. So if they can't answer it for you, they can at least tell you, give you some expectation of when your advisor can answer it for you. Again, this is absolutely in line with our rapid response to client concerns that we've had from day one. This takes my fighter and military background to be very efficient, be very focused, be very transparent, get it all to you, get your questions answered. And so everybody can get back to doing whatever else they do, right? You get back to your life, you get back to our life, that sort of thing. So this is bringing that vision to reality, and super excited about it. Once it rolls out again, you're going to hear another whole video that kind of talks specifically to that, and then I'll hopefully be able to walk you through some screens, that sort of thing. All right, last topic of the day we'll talk about, then we'll close out, is why buy Charles Schwab earlier this year. Well, if you remember, we were in the middle of the rate hikes. We had either the 9th or 10th in January, February. Exhausting, right? It's like, another 75 basis points. It's like, come on, Fed. But you've seen the inflation numbers come down, right? It's working. They're kind of stuck to exactly what they said they were going to do. And the plan is working, so everybody should be happy. But what opportunities does that create? Well, back in January or February, remember when we had the big, the increase in rates, you do have to mark to market. And if you own bonds in your portfolio or CDs, you've seen this. As the rates go up, you see the spot price of your bond go down or CD go down. Again, that's only if you would sell it today, which you're not selling it today. You're holding it to maturity. So it makes no difference other than they have to display something. So since they have to display something, and your bank doesn't do it. If you buy a CD at the bank, they just don't. When you hold it to maturity, you never hear about it. But in a brokerage account, it does have to fluctuate as if you were to sell it today. Well, it has to show you that. Well, Silicon Valley Bank held a bunch of these things, and it basically took them to their knees and took them under. Right. There were a couple other banks along the way. So what happens due to contagion in ETFs is back to this mid-March, beware the eyes, right? Because Silicon Valley Bank fails. The ETFs that hold all of these banks in them start selling off. When an ETF sells off, they have to go out to the individual stock and sell those to meet the cash requirements for the people selling the ETF. It is the poster child for none of us is as dumb as all of it. So there are people out there that watch CNBC in the morning, saw a bank fail, saw somebody get on there who somebody thought was smart and said, it's all going under, right? The financial industry is going to its knees. OMG, OMG, OMG. Those people, the ones that make it on TV, not common sense people. But, listen to this bozo say that the whole slew of bozos, they were saying that, oh my gosh, the banking industry is doomed, right? So of course it sells off. Well, Schwab, who did nothing changed for Schwab during any of this. If anything, they sent out not immediately, within 48 hours, a press release going, hey, we don't have any ties to Silicon Valley Bank. If this doesn't affect us. I sent that out to clients like, hey, we're not tied in with this stuff. This doesn't affect us. But what does the stock do? Stock drops from 80 all the way down to 50 and nothing changed. What does that mean? That's an opportunity, right? So I don't remember where we started buying here. I don't remember when it was. It's basically in every moderate model of, since not only Schwab, SCHW ticker, KRE, which is the regional bank tickers, the regionals, everybody went, oh man, let's freak out. Let's sell the regionals. That dropped too. It's been raging back. Now, did it rage back right away? No. You had all day in here to go, hey, the banks aren't going under. But, this is at least 2 Fed meetings, probably 3 if you span it across here, for people to go, yeah, it's not bad. It's not affecting the big banks at all. There's a stress test in here. I think there's 22 things they have to check or something, blah, blah, blah. Doesn't matter. They went through this massive stress test. It's no joke. And all the big banks were fine, right? So boom, here comes Schwab raging back. Are we going to hold it forever? No. There's going to be time where we've made our money in it. But, when you look at Schwab, probably at 40% from where we bought it, we'll milk it for a little bit more, but it's kind of run its course. But, those are the opportunities that you can look for when something doesn't make sense. And the whole financial industry was not going to its knees. So, that's why we bought Schwab. That's why we bought Carrier. All right, that's all I've got for you today. If you have any questions, go to the website, ankerstarwealth.com. Again, you can submit questions directly through there or through email directly to the VIP services account. With that, we will probably not see you tomorrow morning, but we'll probably catch you on Monday with the big rollout. And again, if you want to be a beta tester for the Black Diamond stuff, send an email to the VIP services and we'll get you all hooked up today so you can play with it through the weekend. Again, let us know every little thing that you have questions on so we can get in front of it. So that goes in part of the presentation on Monday. With that, thanks again for listening. We'll talk to you soon.